Welcome back, everyone. Next, we have Canoo Technologies, Inc., trades on the NASDAQ under the symbol GOEV, and has developed breakthrough electric vehicles that are reinventing the automotive landscape with their pioneering technologies, unique design, and business model that spans multiple owners across the full life cycle of the vehicle. Happy to welcome the CFO, Greg Ethridge. Welcome to the Emerging Growth Conference today, Greg.
Anna, thank you. Appreciate it. Glad to be here.
All right, the floor is yours. Call me back when you're ready for questions.
Okay, perfect. So we're gonna spend about 20 minutes roughly going through the materials here. I want to kind of hit some highlights before I get into the materials. I know that most of the audience is probably pretty familiar with Canoo, but there's obviously been a lot of news and evolution in the electric vehicle space, the last handful of months. So I want to, hit on some things that Canoo is not worried about, and just to start off here, and then we'll jump into some of the other material. But just to be clear for the audience, Canoo is not captive to the consumer. We are focused on long-term fleet, government, and military applications. So we are very different than the broader kind of macro cycle that's going on right now. Hands down credit to Tesla and others that pushed the envelope to get us where we are with BEVs, but consumer is not our focus right now. It's delivering to those commercial users that are not focused on the whims of the market and the headlines that are grabbing everyone's attention right now. Our customers are using long-term financing. They're matching their business against their cost of capital. So again, they're not as focused on where rates are, right? Unlike consumers that are focused on 3-year leases. And with our platform, which I'll get more into, we are very focused on the residual value to our customers. At the end of the day, BEV technology, electric vehicle mobility, is not about ESG and not about buzzwords. It's about economics. The total cost of ownership in an electric vehicle is hands down better than ICE, than internal combustion. And we need to stay focused on that, right? Again, headlines come and go, but at the end of the day, our customers are large corporates and others that have taken long-term, views on decade long-term views on green initiatives, and they're not moving off of that. Even as evidenced by news yesterday that the SEC is going to require, somewhere in the neighborhood of the top 3,000 companies to start reporting their emissions. So they're taking a multi-decade view, and we're focused on bringing economics to them, but also satisfying some of those, those carbon sensitivities that many large corporates are focused on. One other thing I'd mention is, when you look at our product, we've got hundreds of millions invested, focused on this in this business now. We've got 1.6 billion to date invested in our platform. You wouldn't know that by looking at our stock price, but it is a substantial amount of money and capital and time since 2017, when this company was founded, to get to where we are. And our founder, Tony Aquila, or our refounder, Tony Aquila, and our CEO, is the single largest investor with over 300 million of his own personal money invested in this business. So I think, again, for those of you new and those of you old, that's a really important fact. He's put his money where his mouth is, and is a very strong believer in what this company can do and where we're going to be several years from now. So just as I wanted to get some of that off the table. Oh, one more thing. We did announce a reverse stock split yesterday. We selected that ratio because I've gotten the question dozens of times since we put that news out yesterday morning. That is the average reverse stock split ratio of all NASDAQ companies last year. So 23 to 1, or 1 for 23. And I think that's just an important fact. It's also an important fact to know that about 10% of all NASDAQ listed companies last year went through a reverse stock split. So our goal is head down, focus on our business, continue to deliver vehicles to our customers, produce vehicles, and target this huge opportunity in front of us with commercial and government opportunities. So why am I here? I stepped in as CFO 6 months ago. I'd been on the board and met Tony in the early days in late 2020 when we were going through the de-SPAC transaction. Tony stepped in, put capital at risk before the SPAC transaction was closed, and ultimately stepped in as executive chair and then followed on as CEO. He asked me to join the board. I'm a huge fan, right? Tony is a serial entrepreneur. He built one of the world's largest parts databases and knows the auto business, down to the part level. He took his company Solera public after he founded it in his garage, took it public at $1 billion, ultimately sold it twice to private equity, and the last sale was around $7 billion. So the guy knows how to start something from scratch, has a vision, has grit and determination, and is very focused on getting to Canoo to the next stage. And that's what we are as a company and as a team, we're focused on. Canoo is an advanced mobility technology platform that was founded in 2017, later than Rivian, Tesla, obviously, Lucid, et cetera. Again, those guys being consumer focused, we're not. And we were able to take, and with Tony's vision, take that really creative, ground up and groundbreaking platform and pivot it from the early days at Canoo being consumer to now being commercial. In this environment, there's no better place to be than being in the commercial market. But we're also not building class 3 to class 5 vehicles. That's a very competitive piece of the market. We're focused on class 1 and class 2 branded completed vehicles. And you can see that on the right side of the page here. We are delivering these vehicles to our customers now. We're not delivering as many as we'd like, and we're continuing to ramp up, but we are steady and focused on getting those vehicles to market. I'm a believer in our team. Our team has been humble and hungry, and we are focused on, as I mentioned, getting through some of the challenges that the broader market has faced the last 18 months, and then getting to the next 12 months to where we're moving to substantial deliveries to our customers. We've made a ton of progress in the face of this adversity. We've announced the contract with Walmart. Walmart's a key customer. The USPS news that we announced in January is huge. I'll talk more about that. We've set up manufacturing in Oklahoma City in the last 12 months. That was a Herculean effort. We're able to build vehicles there now. And we are now delivering our production vehicles to our customers as of the end of last month, or the end of December, end of last year. We have the right team to do this, and we're going to keep at it. What did we do different? We invested in having a phenomenal product. The product is key. You can't invest $2 billion into have a state-of-the-art manufacturing if you don't have key customers and you don't have a product to sell your customers. We did it the right way. We focused on the product. We tested the product. The U.S. military, DOD, everyone out there, very sophisticated customers tested our vehicles and love our vehicles. And they meet the case using our proprietary platform. They meet the case that we need to satisfy, to satisfy this commercial and government demand. Sorry, I forgot to advance the slides here. So I mentioned, we have some very unique technology. I don't want to do a deep dive in technology here because I think most of you probably know that we have a very eye-catching, great aesthetic, but at the end of the day, ground up, unique development, all in-house controlled engineering, design, IP. We're not reliant on third parties. We're not reliant on extended supply chains across Europe and across the US. We are building in the heartland. We're building in Oklahoma, and we have a very phased approach to both building and expanding our business. We're not going to try to tackle the entire 50 states at once. We're going to deliver to our corporate customers, our government customers in very specific 7 states to start, and then build out from there. So we're not caught with moving too fast and falling in our face. Right at the end of the day, that's our business mantra. I mentioned our customers. We have a huge backlog that we're trying to deliver on. We do have this proprietary technology, and every one of these customers, I mentioned, the scope 1, 2 emissions, companies like Schindler and Walmart and the USPS and others are not moving away from BEV, despite what the whims of the market might have you believe today. And on our technology platform, this again, I know there's probably a mix in the audience of who knows our tech and who doesn't, but this is the core of our platform, is our MPP1. And when we build these rolling chassis, and I'll have Ryan pop up the video here in a minute, but when we build these, the goal is that we are putting 60% of our BOM and 70% of our critical functions in this proprietary platform. It's on the wheelbase of a Prius. It's got phenomenal turning radius. It's great for inner city, but it gives you a maximum amount of capacity on your platform. With the transverse leaf spring, you eliminate the shock absorbers, you eliminate all the wasted space around the wheelbase, and you really maximize on a Prius footprint again, and with the payload of basically a Dodge 1500 and getting you all the way to being able to take this platform and leverage it across both these commercial applications that are our day one vision, but also eventually the consumer applications, all again, software, hardware in-house. Ryan, do you mind just running the video here, and I'll step aside? Yes, you had to loop it twice, but it gives you the visual. And one of the other key elements of our technology is using we were the first to bring the state-of-the-art steer-by-wire technology to mobility. Others, Tesla and others have introduced that as well now. But I think it's just important for the audience to know that this type of technology has actually been used in the airline industry for decades. There's no physical connection between the steering of an airline and similar to this, there's no mechanical connection between our steering wheel and the front two wheels. But that technology has been around. It just never has been massively adopted in mobility, land mobility. One thing that it's also really important is you can actually change the feel of steering through the software. So for the race car drivers, they're going to maybe not appreciate this much, but the commercial drivers, the delivery drivers, and the consumers, similar to what you may have experienced well, actually, you probably haven't experienced, but you really do feel the vehicle, and you can actually adjust the steering feel through software, which I think is pretty phenomenal. As we think about technology, again, I know I'm on a time limit here. We have developed all of our components in-house. It's really important to not be reliant on third-party IP. Our platform itself, as you saw in the last video, it's a minimalist approach with maximum functionality. To get that, you have to control your own IP, you have to control your own parts, and even though we're not manufacturing every one of these parts, because we have obviously a lot of supplier partners, they are our designs. And I think that's really important for, both in terms of components talking to each other in the vehicle, but that minimalist approach reduces the number of parts from what you'd see in other BEV platforms, and dramatically reduces the parts when you look at ICE vehicles. In addition to that, we have about 55% fewer ECUs, which again, because we control the entire ecosystem inside of our vehicle, we have fewer electronic control units that are required from one part to talk to the other part. That reduces cost, and improves the efficiency of that and the communication within the vehicle itself. The use cases, as I know many of you are familiar with, we do have future opportunities both on the commercial and consumer side around lifestyle vehicles, around pickup trucks, et cetera. Those are absolutely in our future, but they're just not today. Our first production vehicle today is the commercial vehicle that's going to get us out on the road at scale with our customers, and then we'll have options to be able to use our MPP1, the platform you see here, with the other top hats that we use to democratize our chassis. Tony, coming out of the world of both parts databases and effectively in his old business at Solera, really being able to give the data streams to the insurance business, very much appreciates the value of this platform and the fact that we can democratize the platform. So that means effectively sell the different components. And so what we've done here, because 70% of our critical functions are in the platform itself, you can actually change out the top hat, from user to user over time. That really changes the whole world of what was traditionally mobility in the traditional OEM sense. And so that is, we believe we've been the first one that has conceptualized that and is actually bringing that to market. So envision Walmart buys LDV 130s, thousands of them over time. They decide, that they want to upgrade to an LDV 190 or something else, or maybe they sell that vehicle to another user and it goes out through the auction process. that user has the ability to then use the already depreciated platform and ultimately change the use case to a truck or a lifestyle vehicle or a sports car down the road, but you're getting it at a fraction of the cost. So because our platform has a million-mile use case, that enhances residual value that ultimately kind of goes back to that total cost of ownership comment. The fact that BEVs are positive for economics, it all comes back to residual value, and it all comes back to the data and the fact that we have fewer parts and a more efficient design, and you're controlling all of that in-house. And it's easy for me to say that on a presentation, but when you've seen that feedback from customers that love it, from the U.S. Army when we sold them a test vehicle, and they've been testing it for the last year and a half, and the feedback is phenomenal, you believe it. If there were an opportunity to have everybody on this call drive one of our vehicles, and that will come in a day, but even just today, I think you'd be really impressed with the performance and the feel, and we get that consistently from all of our large customers that we meet with, and they have the opportunity to drive the vehicles and test the vehicles. I mentioned already, the flexibility of our platform, so I'm not going to repeat that. And I've also mentioned our Oklahoma facilities sitting in. We got 2 facilities in Oklahoma, controlled in-house. We did not want to outsource manufacturing to a third party. We did evaluate that, but we thought it was, similar to Elon. It just wasn't good. We didn't think it was good long-term business. We'd be giving all of our margin away to our contract manufacturing partners. So instead, we took the leap and moved everything into Oklahoma City. That's our assembly plant. It's about 630,000 square feet. All of the robotics, all of the lines are there. We're not up and running at the same scale that we like to be today, but we are making meaningful progress day in, day out. And then we have our prior facility, which is about 2 hours east of Oklahoma City, where we have 2 gigawatts of battery module capacity right now. So those batteries are moved over to Oklahoma City for final assembly and putting in the battery system into the multi-purpose platform. We've obviously had a ton of support from partners, both on the supplier side, you as our investors, and ultimately, our team internally, but also the states. The state of Oklahoma has been a phenomenal partner. We recently announced that we received our first incentive dollars there. It was relatively small, but we thought it was a great milestone. There are more to come. We've been in talks with the federal government about lots of different incentive plans, non-dilutive incentive plans. We have our several different proposals into them. Don't need to get into specifics, but we feel good about several of them, and we're going to continue to advance those forward as we move the company forward. So I covered that already, and then I want to just touch on a couple customers. We announced the U.S. Postal Service agreement. It's only 6 vehicles, yes, but I will tell you there's only 3 players that are fighting for this business right now. It's Oshkosh, which they obviously were awarded their contract many years ago, and by the way, still have not delivered a BEV vehicle to the Postal Service. I think that contract was delivered in many years ago now. I know they're working hard on it. Separately, there's E-Transit, right, which was part of the announcement from the Postal Service in January, and then they tested our vehicles last fall, and then gave us a contract to deliver 6 vehicles to them around the end of this quarter. The reason that's really important is the Postal Service has a fleet of over 200,000 vehicles. They made a very strong commitment to electrify. They are going to continue to electrify. It's a perfect use case. Again, they spend about $5,000 per vehicle to maintain vehicles that average about 25 years old at this point. So they've had this effort in place for a long time, but they were recently funded and given additional about $10 million to electrify. And we believe that we will be in the running for this next RFP. We will see, right? You never know how these things play out. The government procurement process is different. But I think it's, again, a huge stamp of success in terms of where Canoo is. And again, given our steer-by-wire technology, it was very easy for us to move our steering wheel from the left-hand drive to right-hand drive. And about half of their entire vehicles are right-hand drive vehicles. To my knowledge, there's really not anybody else focused on right-hand drive vehicles. So this is a real opportunity for us over time, and they are focused on the LDV 190, and we are very excited to be in those conversations and have a seat at the table with the Postal Service. Walmart, everyone knows about Walmart. Walmart is a phenomenal customer to be associated with. We've gone through extensive testing. They, again, very focused on BEV and economics. We're actually, as Tony always says, we're very focused on not just providing a vehicle, but we're, and creating the ecosystem for Canoo, but we're also trying to help our customers do their job day in, day out better. So we, with Walmart, we've been in lots of talks around different ways to improve their efficiency and last mile delivery. They have been phenomenal partners. They are looking at a wide range of options with us, and we continue to work through those. And we're very confident that we're going to make meaningful progress with them in the next handful of months. So I think I'm near the end. I don't need to talk about NASA, the DoD battery agreement. This again just kind of focuses on our technology and the fact that we're competing with the likes of Lucid and GM Defense with DoD for the next generation battery technology across the military. Again, a mark of success in terms of the team here, and we've been able to punch way above our weight. So I think I'll just stop there, Anna. Maybe you can come back on, and I'm sure we have a lot of questions.
Great job, Greg. We do. We have lots of questions. Let's see how many we can get through. Let's start off with what you just mentioned, that recent 6-vehicle U.S. Postal Service award that will be fulfilled this month. Why is that so important to Canoo? And why do you think your vehicles were so well received for their use cases?
Well, I think it goes back to the basics of, again, as much as ESG is a great buzzword and everyone wants to do the right thing for the planet. At the end of the day, it comes back to economics, and they're a government entity that's been under the microscope. They know that the TCO, the total cost of professional owner, TCPO, is substantially lower. They need to upgrade their fleet anyway, and we provide, given their use case, their routes, the fact that a customer like USPS has depots. They don't have to worry about the charging infrastructure. They're not captive to some of those those consumer BEV issues, and they want to go headlong into upgrading their fleet. And remember, they've only so far, I think, noted that they want to electrify about 60% of their fleet, but that's still a huge opportunity for us, up to 120,000 total units, if you use that and then some of those have been allocated, say about 50 or 60,000 of those units have already been allocated. So there's still a 50 to 60,000 unit opportunity, and we don't need all of those. We'd be happy to take, 10,000 units with them over the next couple of years.
And you alluded to this earlier, but I think it's important to talk about it even more, why you desire to manufacture your products in the U.S. and your growing presence in my home state of Oklahoma. We're so glad you're here. Yeah,
no, it's great. It's great. I learned that you were in the neighborhood. I think the way we think about it is we went through a very extensive RFP process. I know some people know history on this. We selected Oklahoma because one, they were very hospitable. They've got great workforce. Our Native American friends there have been huge supporters. The government's been a huge supporter, but it's also geographically central. They had lost the automotive industry many years ago, and we've been really thrilled to come back and kind of reinvigorate that workforce and create great paying jobs and opportunities. So part of this is we want to be, buy in America, build in America. Yes, we will ship things abroad. Over time, we have international ambitions. But today it's this central. Let's build from the center, the heartland of the U.S. and be able to effectively build up our workforce there, call that home. And we've been welcomed with a lot of open arms in the state, as well as many of the other nations that are there.
And a question from Douglas Veen, important question as well. How many employees are you currently hiring? How's that going employing people, especially here in Oklahoma?
We're making a lot of progress. I think we announced that we were up into the mid 100s in January. We're continuing to steadily build. We obviously have some incentives from the state to continue to build up our workforce there, over this year as we move into higher volume production. Whereas a company, we're also very judicious with the way we think about spending our capital, raising capital. We haven't been happy with where our stock price has been trading. But nevertheless, when you think about the amount of money that's been invested to date and the fact that we're trading where we are on a market cap basis, some of that, I think a lot of that is based on the market. It's not based on Canoo specific items because I think our opportunity is very vast. But nevertheless, we have to be judicious. So we don't want to overhire too fast and have people sit around. We know it's a balancing act. And so we're trying to time, similar to the way we think about manufacturing, we're trying to time that investment into our employees with the time when we need the work, which will ultimately help on the bottom line. So we're not going to be driven by the wrong things, but nevertheless, I know there's a really long-winded answer. We are focused on continuing to grow in Oklahoma City and Pryor.
Doug also says, so much seems to be going well. What keeps you up at night regarding any headwinds in front of you?
Look, I mean, it's hard. I mean, given the likes of the news that's been coming out of the space, and again, although I'm trying to very much focus the audience here that we're commercial focused, and that's absolutely true. It's hard to beat the headwinds when you've got the Apple News shutting down their car program. You have in the face of Rivian missing numbers, others. And I think these are all great companies, but they're just doing different things than what we're doing. And so I think those are the types of things, the impact on our equity price and ultimately the impact on our ability to raise capital is the type of thing that I have to always be thinking about. We are being very creative. Our team is very scrappy. We're finding really good deals to be able to advance the business at cents on the dollar. And we announced some things with some purchases from Arrival North America. And we've been actually trying to purchase some of their European assets as well. But it's at the end of the day, like you can't do everything. So you have to focus on what are your critical 80s to be able to get through every day, every week, every month, every quarter. And that's what we have to do. And it's constantly a lift and shift and moving around and refocusing our priorities. So again, it's there's every day brings new challenges, but our team's excited to attack those challenges.
A question combining from Clay Granger and Deepak Khatri. How many vehicles have been produced or delivered year to date? And what's the production delivery plan for the remainder of 2024? And is anything being done to improve the number of vehicles it can deliver in 2024 and beyond?
So our deliveries, so let me break that down. I can't comment on some of that. We have earnings coming up, but we produced 17 vehicles in Q4. Some subset of those were delivered to our customers. Some of them are being used for other purposes. We are continuing to make meaningful progress to improve our rate of build and delivery going into 2024. We have not given official guidance on what our 2024 numbers are. We have earnings coming up here in 10 or 20 days. We haven't announced it yet, but near the end of the month. And we'll have more details to share then. But we are making meaningful progress. And we want to obviously be doing more faster, but we have to also temper what we can do kind of given the state of the current environment. And I will continue to note, look, our partners, state, employee partners and investor partners and suppliers have been phenomenal to help us through, some of the challenges that I think the broader market has been attacking recently.
Mark Ferreira asks, is Canoo's battery design, the patented one, now the new standard for the DoD?
We have, they are testing our modules, which obviously is a proprietary system that we produce in Pryor. So they have not selected a standard, but we are one of 5 competitors. The 2 I mentioned earlier, Lucid and GM Defense would be household names. And there's 2 others that are lesser known. They are going through a multi-phase process. Just the government and military procurement process is long and arduous, but we're still in the hunt. And we hope to create, as I mentioned, the democratization of the vehicle, both the battery, the rolling chassis, the top hat is really important to we believe what it will be evolution for mobility. And the fact that we have the ability to send, or sell those battery modules separately is really exciting to us. And the fact that we've gotten as far as we have, I think is again, a strong attribute of kind of the technology at Canoo. But also our ability to compete with much larger competitors that are out there.
And can you provide an update on the relationship with Oman GCC?
Olean's our distribution partner in the Middle East. I'm not as close to some of our international operations, so I'll just leave it at that. But they continue to be a great partner of ours, and Tony had a phenomenal relationship in his prior lives as well.
Kevin Latera asks, what future funding options are available to limit dilution?
Look, I'm not going to, I think that there are a lot of funding options that will be enhancements from where we are. We're definitely looking at PO financing. We're looking at, obviously, all the government incentive programs that I mentioned earlier, both federal and state. We believe there will be loan opportunities out there with some of our, partners. But there will continue to be some dilution. We're trying to minimize the dilution, recognizing where we're trading. But we just have to look at the longer term. The way I look at this is you've got, even at cost at $1.6 billion invested to date, there's multiples of where we are on the stock today. I'm not giving any specific guidance on that, but just thinking about that as a very simple metric. That's one way to think about it. Obviously, we have to continue to raise capital and get to break even, and that is absolutely our focus through the balance of this year into next year.
Well, as I'm sure you know, there's lots of questions for you, Greg, but we are out of time. I want to give you about a minute so you can give us some closing remarks for our viewers today.
Yeah, no, thank you, Anna. So thanks everyone for your time. Again, I just think it's important to leave that we have something that is truly proprietary here. I came in because of Tony. Tony wanted, asked me to join the board many years ago, but actually asked me to jump into the team middle of last year. And I'm a huge believer on, his determination, his focus. And then finally, we're not subject to all these consumer whims. We're focused on commercial, government, and military applications. And we believe that we bring a very unique value proposition to our customers. That's step number one, and there are multiple iterations of steps after that. But thank you to Anna, to you and the team here, and thank you to all of our investors and support. And we're at a number of conferences here over the next couple of weeks. And again, thanks to everyone that joined.
Great job, great presentation, Greg. We look forward to following along with some future updates with you and Canoo.
Great, absolutely, thank you.
Okay, everyone, stay with us. We'll be right back with Ideanomics.